Today we are with Emily Boothroyd, the financial advisor, certified financial planner, and I think she has like 18 other degrees and certifications attached to her name, where we are going to have a conversation about the very basics of investing. So I get a question asked a lot, all the time. What is investing? How do I even get started? So I've brought in Emily to help us understand what those basics are. So Emily, can you say hi to everybody?
Hi everyone, it's so nice to be here with the DailyWorth group, and I'm really excited to talk with you today about investing basics.
Thanks, Emily. So can we just start off with what is investing? What does it mean exactly?
So investing is really just the concept of growing your money over time. It's using the power of compounding interest, compounding returns to grow your money and help it earn more purchasing power for you over the span of your lifetime.
So can you give us some examples of investing? Like, I know that a lot of people think investing is, maybe in the stock market, but there's other ways to invest your money too. How do you even know where to begin?
Sure, and I think there are a lot of maxims that people are used to hearing, right? Don't put all of your eggs in one basket. It's really important to diversify. And you get a lot of advice, and there are a lot of talking heads kind of telling you what you should and shouldn't be doing. I think the very core level of it is really understanding what you have in your life and thinking of that as your first kind of big, broad portfolio. So maybe you own a home, or maybe you have your own business. You might have a retirement plan like a 401k, and you may also have some savings set aside like a rainy day fund. And to the extent to which that rainy day fund might exceed the amount that you really need, you might then be starting to think about investing in general and have your own investment account. So your portfolio doesn't just mean stocks and bonds. It can be a whole lot broader than that.
Yeah, it's fascinating, and I can't wait for my rainy day fund to exceed what I actually need. I'm still working on that one.
Yeah.
So explain the basics of inflation to us, because I think as far as investing is concerned, you have to start with the concept of inflation and why that's important.
Yeah, so to me, inflation is really just purchasing power. Okay, so for example, the dinner that you spent $100 on last night, in 10 years isn't just going to be $100. So right now, inflation's fairly low. It's at about a 2% rate. So let's just assume that it would stay the same. That dinner in 10 years is going to be $120. So if you just stuck that money under your mattress and then pulled out the $120 bill for that dinner 10 years from now, you're going to be $20 short. However, if you decided to invest the money, and we can get to kind of how that would be invested a little later, but if you just invested the money and made a 4% rate of return, what that really means is a 2% rate of return. So if you got 4% investment returns and inflation is at 2%, you're earning about 2% above the current rate of inflation. You would then have $148 at the end of 10 years. So you walk out of the restaurant with 28 bucks in your pocket.
Thank you so much for explaining that. That makes it so clear why investing is important, especially because a lot of retirement savings is really put on the individual in the United States right now. And understanding that if you don't invest your retirement savings, then there's a really strong chance that you're not going to have nearly enough, or just that you're going to have missed out on the opportunity to have more, 10, 20, 30, 40 years from now, depending on when you retire. So the next question I often get is, where do I begin? How do I even begin investing? What advice do you have?
So I think the first piece of advice is to not have that kind of analysis paralysis. And I'll give you a quick example. I was a young attorney. I did not really know the difference between a stock and a bond. I think if you impressed me, I might know a little bit. But I had a 401k, and I just kind of left it. I didn't invest it proactively, and I stuck it in a money market for a few years. And lo and behold, guess what happened a few years later? My investments made nothing. So it's really important to kind of at least take the first step of being interested and learning a little bit more about investing. And in your 401k, it's really, it's important to look at your options and what you have, which can be very daunting. So my suggestion is that you engage a professional of some sort. Now, some 401k plans will have a hotline or a phone number that you can call to speak with someone who can advise you about how you should be allocated in your 401k. You can also talk to a certified financial planner or a financial advisor Or there are some other really great options. Brittany Castro is a great example of that. People who have online money courses where you can learn more about the basics of investing via an online course.
You know, that's a great point about your money market account, because actually, having spoken to a lot of people and asked them about their 401ks, a lot of people, even very smart, educated, successful people, don't know anything about their investments. So if you don't know anything, don't feel bad. A lot of people don't know. What I've realized that they don't understand is that there's actually funds that make up your 401k. Your 401k isn't an investment unto itself. There's actual funds that make it up. And the risk is that if you don't know what your money is invested in that 401k, it might not actually be in the stock market. It might be in a money market account. So while you think you may be invested, your money might not actually be growing for years and years, and you may not know that because you never looked at it. That's a great point, Emily. Is that just by starting with your 401k, that's the perfect place to start learning as an investor. So I guess the last question I have for you is, can you just explain the stock market? Like, why are people so afraid of it? Why does it have such a bad rap these days? And should it have such a bad rap? And is it possible to be an investor without investing in the stock market?
So I'll kind of work backwards. It's totally possible to be an investor without investing in the stock market. The stock market is just kind of one part of investing, and historically it's gotten better returns over time than most other places that you can put your money. However, with that kind of reward also comes risk. So people, I think, are really afraid of it because there is some risk involved. You know, if you read some of the investment books, I think one of my favorite analogy is that the stock market is a bit like a drunk person. You never really know what it's going to do. It's highly dependent on the American psyche, and people can drive it up and down for different reasons. People can panic and cause some issues in the market, and we've seen that in the past. So it's not always contingent upon the health of the companies. However, over time, the stock market has made more money than most other asset classes. So if you're young and you have a longer time horizon and you have the ability to ride out some of the ups and downs of the stock market, it's a great place to be in your portfolio. What I would say is that most investors can tolerate having at least a portion of their portfolio exposed to the stock market. I'm going to back up just a little bit and talk very generally about what I mean when I say the stock market. So stocks are shares of companies, and the share value can go up and down depending on what's going on with the company. The risk is that if the company goes bankrupt, your shares may not be worth anything. So it's important to understand what the company is doing, look at the balance sheets of the company, and really understand what they call the kind of fundamentals of it. Now, not everybody has the time to pore over the company reports and read the prospectuses and look at everything. So that, again, is why it's really important to engage professionals who do this for a living and analyze what each company can do and really help you to understand where your money should be when it's in the stock market. You can also get into bonds and other types of assets. Real estate also is another place where you can invest your money. So again, stock market's not the only game in town, but it certainly is a decent game. And while it hasn't earned the reputation of just being terrible that no one should go into, it is risky. So you do really want to know your risk tolerance before you start investing.
Thanks, Emily. I think really the most important thing that you've said is to engage with a professional. And the professionals that we recommend starting with are certified financial planners, because that means that they are credentialed to work with you on an hourly basis. And that way that you can decide how much you can afford or desire to work with a certified financial planner. But they really know how to help you get started, because not only do not a people have a lot of time to pore over those company statements, I'm not even sure that most people really should be poring over those company statements. That's why it's a good idea to have a professional. So, Emily, thank you so much. I think a lot of people will understand the basics as a result of watching this video. So we're going to sign off now. This is Amanda Steinberg from DailyWorth.com and Emily Boothroyd from Westport Resources in Connecticut.